All right, y'all, back to work. Weekend's over. Got a big week ahead of us. And boy, we began the week this week with some choppy, nasty sideways ranges. If you ask my opinion, though, I think these range-bound markets, these are the easy ones to make money with. In fact, from what I can see right now, there are three very simple ways for us to make money on Tuesday. I want to cover the entire game plan in tonight's video. We'll talk entries, we'll talk exits, we'll cover some variations in case I'm wrong. So we'll cover the entire roadmap. I want to make sure you have a game plan to make some money tomorrow as well. So charts are ready. Enough of the intro. As always, thanks for tuning in and watching my YouTube videos. Let's now dive in and make some money on what should be a pretty easy to profit Tuesday session. S&P SPY ready to go tonight. Nasdaq triple Qs are always ready. I have only two, but very important clues here on the charts right now. They're telling me where I think the winning trades are waiting for tomorrow. One of those two clues is right here on the hourly time frame. It is very easy to see right now. The buyers have control on the S&P SPY. Buyers have control. Nasdaq triple Qs. I like to use the hourly time frame as a directional filter. And one very obvious clue right now is we're bullish overall. The second clue is down on some lower time frames, some tick charts. We're going to grab that and talk about how to time the entries in a moment. But before we do that, though, let's talk schedule for tomorrow. There's no major news tomorrow. We don't have any major news until Wednesday. We got CPI report Wednesday morning. Got a big bond auction on Thursday afternoon. So we definitely have some bigger news coming out later on in the week. But obviously right now, everyone is waiting for more updates. Supposedly, all the big guns are in London this week between the US and China trying to get some sort of trade deal going. We are definitely eagerly waiting for updates on the new tax bill in the Senate this week. And of course, trade updates regarding the US, China, and all the other trade deals that are supposedly in the hopper. So we're definitely going to keep an eye on that for tomorrow. But no major news tomorrow. Everyone wants to hear about trade deals, the CPI on Wednesday, and the bond auction on Thursday afternoon. Let's go back to our charts, though. There's one more important clue here on the tick charts. Pretty obvious right now, we're overall bullish here on the higher time frame. But the real big clue that gets me excited for tomorrow and really makes our job easy to make money tomorrow is right here on these tick charts. Now remember, if you're watching for the first time right now, all the time frames, upper left-hand corner, tick charts are based on volume. One tick is one trade. These make entry patterns, entry timing, pattern recognition is so much easier on tick charts. And by the way, that moving average right now, the only indicator we need to make money, consistent, repeatable profits in any market is the 21 EMA, in case you're watching for the first time right now. There's one really great clue on the charts, and we call these stacked ranges. There's a range up here and a little range back there from last Thursday afternoon. Now, why would multiple ranges be such an important clue? Well, because the most recent range is a magnet, and ranges like to rotate. We use things like pendulum swings. You'll notice I measure the amount below, the amount above. But the bottom line, though, is that range right there is going to want to rotate back and forth with symmetry. Very important. But arguably the more important range here is the range down below us. Because the range below us, we've already had a breakout of that range. And what do we know about range breakouts? It's just a matter of time before they pull back and give us a breakout pullback. So if you put these two ranges together, the current range wants to rotate back and forth. The previous range is begging for a breakout pullback. And so I mentioned earlier, there are three different ways, three different trades I'm watching for tomorrow. One of them is absolutely a breakout pullback going lower. I've got two more trades, though, if we go higher. So I think two more exciting trades, to be honest with you, if we go higher. Why don't we cover the two trades going higher in a moment? But first, though, my favorite trade for tomorrow is definitely going to be a breakout pullback down here. Now, when I say breakout pullback, I'm not going to blindly buy this area. What I'll do is look for two entry patterns, the same ones I teach in our free video course. For example, on that move lower, All I'm going to do is wait for a bear trap down here. Wait for the price to pull back to that 21 EMA. And once I see sellers commit twice, now I know where their stops are. Now I know where sellers are forced to buy their way out of their position. And I can basically buy right into those stops as we rotate back up into the range up overhead. The second trend I'm looking for now is an add-on. Guys, if there's one scenario where you want to add to your winners, it's always during range rotation, because now we know the market wants to go below, the amount above, it wants to rotate to the side of that range, right? Okay, so knowing that range rotation is important, to add to my winning trade now, I'm looking for one small clue here: separation off that moving average. That separation tells me now if I can get a higher high in price, I can look to again add to my position underneath that low. So one of three trades I'm watching for tomorrow is basically a bear trap and adding to my winner with that separation off that moving average and adding on like I teach so well in our free trading course. Now, before I talk about that second trade for tomorrow, be aware, two variations. For example, sometimes we don't get that bear trap down there, right? Sometimes it'll run all the way down and just whoop and run right back up again. If that happens, if we pop up and start to grind up going higher here, now I want to get in underneath prior swings. So it's really important that we remember this small kind of variation. If it runs down, and if I can trap in some bears below that moving average once, twice, I can use a bear trap to get in. But again, if they really bounce up really quick and we start running higher here, I don't want to do it up here, right? That kills my risk reward ratio. So if we bounce hard off that low, my goal is the same, but now my focus is to get in underneath prior swings, because then that will allow me now to offset that risk reward ratio. So a very small adjustment there, but very important. If you like making money, you want to kind of use that adjustment there if it bounces back up off of that low. Oh, and one more adjustment too is, and again, then we'll talk about going higher here in a moment. We oftentimes will get that strong run down. We see so many of these in our trade room where we'll see a run lower. We'll get a nice, easy bear trap, 1, 2, nice, easy winning trade. It'll bounce back up. But remember, ranges, they love to break out pullback. So the same reason why this is a great place to buy a breakout pullback is the same reason why sometimes the underbelly of that range will also hold for a breakout pullback. I love these trades, by the way. We call these retest trades. What does that mean? Well, if they run back down and they retest that low, I want you to think about a zone down here. The breakout leg of a trading range can be used as a measuring leg. Now, why is it important? Well, because once we know how big that pullback is, the size of that breakout leg, I can project down now and create a little bit of a zone down there, right? We call this the money zone down there, right? It's below that recent low. It's the measured move going lower. So in that money zone down there, this is where a lot of rookies get in trouble, because they see this running lower and they think it's a reversal. It's not a reversal. Remember, we're overall bullish on the hourly chart, and that range above us, that multi-day range above us, is acting as a magnet. So whatever you do, do not let that voice in your head fool you. I want to do it again. Bears try once, bears try twice, trap those bears in, squeeze those stops. And again, whatever you do, do not just simply look at this thing going higher. Add to your winner. Keep the foot on the gas pedal. Again, if you're with us in our trade room, you know how much we love these retest trades. We run down. It doesn't keep rolling though. It'll roll over, retest that low, and this is a gift from the trading gods, because again, it'll feel very bearish. A lot of inexperienced traders, they'll get fooled by that, but it's a bear trap, right? It's a double bottom bear trap and a run back up into that range up overhead. All right, now you know some variations of the first of three trades for tomorrow. I want to talk about two more trades here going higher. Before we do that though, if you're watching for the first time right now, this might be a brand new language for you. I know most folks watching, you guys know these patterns already. You're making money with these. But if you're here for the first time right now, this might be a brand new strategy. Don't you worry though, I teach this entire system in my free trading course. In fact, I have a ton of examples of bear traps, add-ons, retest trades, V-bottom trades. Guys, I want to help you time better entries with these techniques. I can't teach everything in this YouTube video. What I'll do is I'll put a link up top for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be banking consistent profits. So if you're still missing the best entries each day, if you've lost your confidence in your current strategy, again, pause the video, hit that link that popped up there, watch that free trading course, because you're going to love all the trade examples I include in that short video series. The best part is it's 110% completely free for you. Also too, folks, guys, keep in mind too, I'm going to put all the important links you need to learn the system, time better entries, get your confidence and your P&L back in the green again. Again, most folks start making money all on their own, all from that free video course. So start there first. I'll put all the important links you need to learn the system down below the video tonight, description of the video. And while you're down there too, I'm on Twitter or X during the day, posting charts and videos and mindset stuff. If you're on Twitter X, give me a follow. My handle's down there for you as well. Again, all the links you'll need to learn the roadmap, hopefully earn a whole lot more because of it too. I'll put everything you need in the description of this YouTube video. All right, so where did we leave off here? I wanted to break there for a second, give you guys some more information there in case you're watching for the first time. So 1 of 3 trades for tomorrow is a bear trap down here, basically off a breakout pullback zone below that range. That's definitely my favorite trade for tomorrow. And I give us kind of 3 variations of it, right? The retest trade, the bounce up hard trade, and the straight bear trap and the add-on trade. Now, let's talk about going higher here. There are 2 types of trades I'm looking for as we go higher. One is a breakout. The other is a fake out breakout. Now, trading breakouts in a bullish market, trading a bullish breakout is relatively easy. On the Nasdaq, a bit later on in this video, I want to kick this up one more notch, because you will see in the Nasdaq is ripe for what could be a beautiful fake out breakout. Now, fake out breakouts, they sound very easy, but when you go against the trend, there's really only one type of fake out breakout I really trust. We're going to talk about that a bit later on the video. So we are just getting this video started right now, so do not go anywhere. A lot more good money making details coming up here for you in the coming minutes here on this video. Let's talk about a breakout though going higher. There are ultimately 2 types of breakout patterns to look for as we go higher. One is your typical breakout pullback. Now, whenever I say breakout pullback, if we break out of that trading range, how do I know when a breakout is going to be successful? Is there something that would tip us off? You know, for example, because earlier, like I said earlier, we may see a fake out breakout, right? So how would I know? How would I know as we go higher if I could really trust a breakout going higher? Great question. It's always separation. So separation occurs when I break higher here. If I start seeing this price begin to separate away from that 21 EMA, and you'll know this because what happens is the pullbacks are no longer going to pull back that 21 EMA. Look over here. No separation, no separation, no separation. All right. So be very careful if we break out higher, because we oftentimes will break out higher and then rip lower, and the amount above, the amount below, that will tell us now, again, bear trap down here, back up we go again. But if we break out and we start separating now away from that moving average, when I say separation, again, what I mean is the pullbacks. The deepest part of that pullback is not going to pull back all the way at or below that 21 EMA. That will tell you now we have a legit breakout. Now, once we know we get a good breakout, now that high, that high, that high, all of these, what are basically resistance levels now, those will now turn into support levels. Now, when I think about a breakout pullback, I think about, well, again, there's two types of breakout pullbacks I'm watching for tomorrow. The first one is kind of a classic, traditional breakout pullback. It's a two-legged pullback. It's, again, separation off the moving average. It's one leg and it's two leg. Now, when I say two-legged pullback, think about a measured move, A, B, C, D. Again, now think about the scenario, right? We're popping up, we're separating off the moving average. Separation says, okay, this breakout is legit. We now don't chase after it. We want to buy low, and we know that previous range is the perfect spot to do it. Measured move, A, B, C, D, and between you, me, and YouTube, my favorite two-legged pullbacks go a bit even further than that ABCD. So imagine a measured move that goes a little bit further, right? Do not be afraid if that goes a bit more than two legs. Those are the best ones. The bottom line though is, once I get at least that two-legged pullback, I'm running into prior levels of resistance now that use support. I'm going to use that same technique again, that same bear trap into add-on. Let it pull back to that 21 EMA, bears once, bears twice. Why twice? Because I want to buy into their pain. Also, too, I have yet to find any indicator or any other chart pattern that works better than bear traps and bull traps. Of course, bear traps in an overall bull market that we're seeing right now. So once I see those bears are fooled into that short, then I can buy into stops. And again, as we're running higher here, I'm always looking for that separation again, right? Separation of the moving average, higher high in price. And again, there's a lot of examples of this bear trap into add-on technique. A lot of examples of this inside the free video course. Now, my goal on this is two things. One is a target is back up to retest that high. And two, we now know the breakout leg is the measuring leg. I'll leave that runner to that measured move up top there as well, right? That same technique, the breakout leg, measured leg technique, can also be used for a target, not just an entry on the move going lower. So one of two breakout pullbacks is a very typical breakout pullback. Separation, two-legged pullback, bear trap, add on, target back to retest the high, and again, measured move is the runner from there. I've got one more breakout pullback, and then we'll grab the Nasdaq and talk about my favorite trade for a fake out breakout off of the high. The second type of breakout pullback is almost identical to what we're seeing right now with stacked ranges. So for example, we may get some good news out of China, good news out of London, right? Supposedly right now, we got Percent, we got Lutnick, we got Greer, I think it was, all in London right now, negotiating a trade deal right now, supposedly, with China. We may see some good news overnight. If we get a nice strong spike up overnight, it will oftentimes go sideways into a new trading range. Now, this is one of the easiest ones to make money with because we already know that whenever I see two ranges on the chart in front of us, what happens? The most recent range is always the magnet. Recency is always the magnet. The previous range now you know why I love this one so much. It's a breakout pullback, right? So imagine now some news comes out overnight, we pop up, we find our way into another range overnight. Now all of these prior highs now become levels of support below us. We now wait for that breakdown. We get into support. Am I blindly buying this? You can if you want to. I never had much luck blindly buying or using divergence or reading tape. I spent all the money on the book maps and the order flow tools, and I was never able to get much consistency out of that. You know, even a broken clock is right twice a day. So it does work once in a while. My favorite go-to entry, though, is always going to be, wait for that pullback to that moving average, trap those bears in, squeeze those stops, because now I'm not predicting. right? I'm just waiting to see, do the sellers, do they commit, right? Oftentimes what happens is, it'll keep going a bit lower, right? And then it'll pull back, and then the bears commit like that. So there's no gun to my head, right, to pull the trigger right there. I can wait until I see a good amount of bears coming in, and then I can squeeze those stops. And remember, what makes ranges my favorite is they love to rotate. So we're not just going back to retest the high now. Now we're trying to finish off that pendulum swing, the amount below, the amount above, right? Like I have over here, marked up below, marked above, right? Same idea here. And now as we rotate, again, I'm going to keep on beating this drum on these videos because adding to your winners during range rotation is the easiest way to turn a nice winning trade into a huge profit on your account. The easiest way to make your account grow quickly is to find a good entry buying low, and then once you see the separation, start adding to that winner. Add one more contract, two more contracts on, and again, I will take some profit off at the high of that range, and I will leave a runner for that pendulum swing going higher. Those are two variations of a breakout pullback. This one definitely is my favorite because we can use that range to rotate running higher here. Okay. That was the easy stuff. Let's kick this up a couple notches now over on the Nasdaq. Cover the simple stuff so far, right? Buying the dips, buying the breakout pullbacks. Before we dive into the Nasdaq though, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in and watching my videos on the YouTube channel. So guys, thank you so much for all the likes, subscribes, all the ongoing support. Now I promise I'm done begging for likes. Let's now dive in those tick charts and find some entries over on the Nasdaq. Well, what a gorgeous chart right now here on the old NQZ, right? We got the bullish range up here, gorgeous range, obvious range, right? Rotating back and forth like that. And then what is not so obvious is that little tiny range back there. It looks lonely, doesn't it? It looks lonely over there. It would love a friend right now. It would love some company, right? Back over here. I'm kidding with you, right? But that's the same breakout pullback technique I mentioned earlier. Look at that triangle off of that low. If you guys are in my free video classes, you know how much we like to use triangles and pendulum swings. So yeah. No doubt about it. I love the breakout pullback zone there. I love the break it down, trap the bears in, squeeze those stops, use that rotation. I'm not going to repeat the whole thing over again because the same stuff we mentioned earlier on the S&P and SPY can be applied there pretty easily. Nasdaq, triple Qs. And of course, if we do break out, right, we may break out and two-legged pullback. Absolutely, right? Prior highs can be used not as resistance, but now as support, right? Don't forget one leg, two leg, bear trap, right? And back up we go. Remember, don't forget breakout leg, measured leg, same technique I mentioned earlier on the S&P. And again, if you want to make this super easy to make money tomorrow, it'll pop up overnight. It'll be a sideways range up there. That new range is a magnet. We'll use that previous range now for a breakout pullback, run it lower, bear trap it and back up. And also, too, don't forget, too, that knife cuts both ways. So, for example, right, if we go higher first and then back down again, remember, don't forget the amount above, the amount below. I don't want to overcomplicate things too much on these videos, but don't forget, right, that symmetry, that pendulum swing, that knife cuts both ways right there, right? So just be aware of that running lower, and that will give you now that bears once, bears twice, back up from there. Use that symmetry off the high, off that low as well. I love those as well. Now, I've made you all wait long enough. How do we trade a fake out breakout off of that high? Well, remember, it's not as easy as it may sound because we're very bullish overall. And most importantly, we're grinding higher, right? We're kind of grinding higher right now. Grinding markets, they're very difficult to stop. So in a lot of cases, what I would do is look for a crown reversal. We got major highs up overhead, major highs up there. So The Nasdaq is definitely one that is potential for a reversal off of that high. One of my more favorite reversal patterns is a crown reversal. We go up. We let the buyers now kind of rope themselves in right now. Let the buyers try once. Let them try twice. I want a lower low in price and move right above that high. We call this a crown reversal pattern. You'll see these everywhere, right? Everywhere in the chart. We go up, 1, 2, lower low above the high, back down again. These are everywhere. But this is not my favorite trade for tomorrow because again, we're pretty bullish right now. We're grinding higher. This in a lot of cases would be my favorite reversal for tomorrow. Not in this case though. The one I trust the most to reverse off these highs is a V-top, reversal. What'll happen is it'll run up, it'll get whacked back down. And remember that separation technique I mentioned earlier where it separates off that moving average? This is exactly what you're going to want to see on this. It'll separate off that moving average. Now, here's where the magic happens. We draw a trend line off the lows, bring that trend line up around that high. Now, look left, find a prior swing, and repeat after me. First test is the best test off of that channel. Now again, you could get aggressive on this. You could wait for it to pop up, buyers once, buyers twice. It's basically a bull trap pattern like I teach in the free video course. That one, momentum is not enough yet. That's, again, I would go pretty small on that one if I took that trade tomorrow. My preferred reversal tomorrow is going to be a run up and a strong whack down, and it begins grinding back down again. Now remember, rotation. It wants to rotate off the high down to that low. We now know where this market now wants to go. We also now have momentum turning over. That's the reason why I like this one better than a crown reversal like that, right? We go up, buyers once, buyers twice, but the high, I like that one right there. Again, those are a bit too aggressive in this situation. If I see it pop up and really get whacked back down again, it starts grinding down. Separation off the moving average. Separation is the big clue here. We draw a trend line off the lows, up around the highs. That finds my channel, and all I'm doing now is marking off those prior swing highs, and I want that nice strong red, what is basically a bull trap signal like I teach in the free video course. That's my signal for the short going lower. And remember, that does nothing to change our breakout pullback. I will definitely look forward to the short off the high, down around that low, and then bear trap once, twice, back up, and we're running back up into that range again. So keep an eye out for that V-top reversal. It'll really V-top off that high, grind down, good separation. Don't miss the first test. And remember, that's only half the battle. Now we finish off rotation down, we trap the bears in, and we run that thing right back up, trade the rotation back and forth. All right, guys, that's the game plan for Tuesday morning. Now, speaking of tomorrow morning, guys, the place to be is in my trade room, 8 o'clock Eastern time. I can't think of any better way to learn this stuff than to do it with me, trade along with us every morning at the opening bell. As always, I'm going to put all the important links you guys need to learn this strategy, time better entries, get your confidence back, get your P&L back in the green again. Again, enjoy all the trade examples I include in the free video course. Hit those links in the description down below. Then come join me in the trade room and we'll trade it together every morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.